Hi, Warriors. How's everyone doing today? Just want to say hi quickly. How's everyone doing? Okay. Want to welcome our viewers at investing.com. They're all in the background behind me. I'm facing you guys. Lo Sinatra, Ren, Brock. How are you, buddy? I'm doing fine. Kevin, how are you? What a great trade by Blake here in WTI. Okay. What a great trade by Greg here in gold. And we'll see what happens here. So I thought you guys might want to participate in some of these pattern and plays that come across, and if you're not at your workstation, they'll be pushed to your mobile phone. So here you go, guys. If you've made money being short crude this week based on the call from Tuesday chart of the day, you may want to peel a little bit off and hang out with us. My screen isn't showing. Oh.
Yeah, it's black.
That? Oh.
Now we can see it.
All right. Thank you very much. Ride the curve. I hope that you stay on the track when you're riding the curve. But here you go. This was a great entry. And you can see up 6% here. Greg has been long gold for a while. So I just posted the link, hello Monica, for you guys to check out our pricing. And you know, on Thursday, with the investing.com crowd here, and you guys are big news followers, you're going to stick around for Anthony Chung. He talks about how he gets an edge from news flow at the top of the hour. And for those of you that are new, you may want to check us out and join our trading community. Anyway, some great trading by the team this week. Just wanted to acknowledge it. And let's take a look at what's happening here in the markets besides crude and gold. I've been talking for a while that it was possible that the market might peak. It's WD Gann stuff that might peak on the solstice, and that was this weekend. And as you can see, a day after the solstice, we started to get some a pullback in NASDAQ. Right now, it looks like a 2 on the daily. Maybe we get one more push, but pretty negative action from all-time highs up here. Did confirm the highs, so you know maybe they'll come out with a vaccine and rally it one more time into the 4th of July. But I think that's it for oil. Okay. We might get rallies back to 40, but I think the top's in. If you follow markets, you'll notice that just like in March, crude was crashing before the S&Ps really started to take it on the chin. They put in a secondary high before the coronavirus crash, so we even went negative there. Oh, thank you very much. We do both because we're players. Yeah, and okay, I like that. So here we go in the metals, and I don't know. Blake was talking about that we could have a false breakout over 1767, and we are $9-10 lower. I can't rule out one more high up to this line that would take it to 1800, but as I was saying yesterday, you know, 1780, 1800 was my targets I talked about for a while, specifically 1784, and we got to 1779.38. Close enough for government work. Okay, I'm not saying we can't have one more push up here into the 1780, 1800 level, but not the greatest action. Let's see how we're almost at the end of the week. We're still higher on the week, and it's going to take a lot to turn it down to have a reversal week. It'd be this close that's down there around 1720. Where we are challenging a 2-week off number is this, which we came off of yesterday. So this might be the first 2-week reversal we've had all the way up in the S&Ps. If we close under this 3036.5, you just count back 2 candles to get a 2-week reversal. And if we close under that, I'd say, you know, don't be long at the minimum. And looking at the dollar, it continues to push ahead. And if you really, you know, if they can't turn the dollar back down, we're really going to have, I think, severe risk off if we start closing over 98.20. Okay. But I really want to feature our team. And it's the best team on the net, in my extremely accurate and humble opinion.
And unbiased, most importantly.
Unbiased, objective, not subjective, but you know, it's a pretty good team, guys. There's Blake and Grega, Stell, and Steve's very unbiased and very neutral, never has a strong opinion about anything. And there's me and Joe Perry. Joe's been posting some great stuff on LinkedIn, guys. Just a hint to get some of Joe's analysis. He's putting out some great charts there. Follow him on LinkedIn. Paulie Franco does the European crossover, gives you an edge into the U.S. session. Amanda's a great trader. You know, she's been cleaning up on a strong dollar, particularly against the pound for, you know, quite some time, still a cable bear. And someone who draws some of the most beautiful artwork and chart work is Andre Cardoso, and he ain't bad either. So you get harmonics, you get a professional scalper in our members chat, you get Paulie and the European crossover. Paulie spent a lot of time in members chat. Steve's in members chat a lot, and you know what, you could come in to face every day and not have an idea, and after you watch Steve's rundown of the whole board, it covers what Blake doesn't, you're going to have a few ideas of what to do, so you could come in with a blank slate. That's one thing about having a team and a community, is that we share ideas and we have a mastermind. So I'm a big fan of these guys, and one of my philosophies is surround yourself with traders better than you. And that's what I've been doing for over 3 years with this whole team, and it's lifted my level of trading, just having the intelligence gathering of their work. Okay, so Nikita agrees with me. Experience does matter. If you've only been in the market, say, a couple of years, you know, you're still an apprentice. That I've interviewed over 1,000 traders, and most will give me this answer. I'll ask them how long it took. Yeah, you're not always going to be right. Yeah, yeah. Throw out that word ego. It's edging God out. Okay, so you know, you're going to get a high percentage of calls in the members chat, not only from the team, but professional traders that realize there's an advantage since they only have 2 eyeballs, no matter how good you are. Even Blake has said some of his best ideas come from the community. So no ego in that, just realizing that it's hard to be a robot and see everything. And when you're hanging out with people that are competent, you may see something that your eye didn't catch at all. And then once it's pointed out to you, you line it up with your work, and it could be really something that you wouldn't have got without being part of a community. So I invite you all to join our community. You're going to have a little, if you're here for the first time in face, you're going to have a little taste of some of the work that we do during the first hour. And I'm going to turn it over to Blake. Nice crude call, Blake. Nice work, buddy.
Hey, thanks, Coach. Hey, you know, before I actually move into the charts, I'm gonna talk. You were talking a little bit about our community, and I'm gonna share with you guys at home really quick. This is our chat room, right? So to get to the chat room, if you're in ForexAnalytix right here, there's a little link right here next to your avatar. It says go to chat room. That'll lead you into this room. And you can see that, there's all of us just chit-chatting. There's some comments from me about how I missed the dollar Canadian long this morning. I was picking up the Euro Aussie down by 163 as I sold some at 164 yesterday. But you'll notice a lot of chatting right now from Amanda and Paul Franco, two of the best scalpers I know. Really, they're really good. They don't put any patterns in play in the ForexAnalytix platform because they're really active trading. I mean, between the two of them, they're just scalping around the markets. That's how they make their living. Amanda, she supports her family. Paulie's he's been a self-supporter for so many years. I've worked with him for 7-8 years maybe now. When I first brought him on to the Wise Trade team years ago, and both of those guys are great. And so, between them and then, there's so many great traders in our chat room. I mean, I could list them all, but you guys are on Jumbotron. So here, I'm going to put you guys up on Jumbotron so you can say hi to everybody. There's Paulie, there's Stelios. You can see everybody's just kind of chatting around, and there's a lot of you guys listening in here right now. I just want to say that this is where our community really matters. And this is where this is where, Dale had said it, this is where a lot of the ideas come from, because I get up in the morning and it's 3 o'clock in the morning and I'm still trying to wipe the sleep out of my eyes, drink a cup of coffee. And I've got all these folks, not just people that work in the ForexAnalytix team. I've got tons of people that are, we've been trading with for a long time that are like, yeah, I'm looking at this, looking at that. And it gives me ideas, fresh ideas immediately. And that is, to me, awesome. And that's I think one of the best benefits of ForexAnalytix, just from an intraday trading standpoint. Obviously, you're going to get a lot of great ideas throughout the course of the day. Not only in here, but with the patterns in play as well. But it is really a wonderful. I'm gonna just push this back over here. So. It's just wonderful having people to chat with. Jane, she wrote in yesterday, and I thought this was pretty cool. Which she's in Spain, and she's like, I don't know what I would do through this lockdown without you guys here and people to talk to. So, and there's a lot of different reasons for ForexAnalytix. The community aspect is great, and look, we don't all have great days. We have bad days, but at least you have people to talk and chat charts and trades with. And that's, that's important, because I, like myself, I work at home. And so I've been working at home for 8 years since I moved back to Arizona. And it's nice having that community feel. And that's why, one of the reasons why we built ForexAnalytix is just when I left Ally Financial as the chief currency strategist there, I wanted to make sure that we had a good place for all of our traders to be. And that's what ForexAnalytix has really become for many people. Okay, enough about that. So let's talk a little bit about the euro. So, if you were following earlier this week, I had the euro drawn like this as a pennant, and I redrew everything yesterday. If you have ForexAnalytix and you got the analysis last night, I'm drawing it all as a flag now, and that means that we can test 111.50, which I still think is where we're going. Might even make it a little bit lower towards 111 before heading higher. The scary thing about being long,
on Tuesday, you warned people up at a little bit above 13 that we were 61.8 back and not to be long up there.
Yeah. Thank you. Yeah, when we were heading up to the 618, which is right here, when we were up here at 113.30, I'm like, you got to be careful being long. It's because this long-term trend line was still in effect, right? And we have come off quite aggressively. And here's the thing. Here we are. Okay, so here's the thing. I was reading yesterday, and I was telling people in the chat room, there are a lot of banks that are getting very bullish the euro. They're pointing towards 120 and beyond. And I'm like, yeah, you know, the whole market's really bullish here. So, and that doesn't mean that we're not going there. I'm just thinking that near term, we probably have to correct. And especially with stocks looking a little weaker, you're bound to get the dollar firming up. So here's the S&P. And the S&P has come off, you know, this trend line, and it looks a little weak. And you know, if you were with me yesterday, you know that I'm looking at the 618 retracement. And yesterday afternoon, I said if we break 130.70, I told people in chat, we break 130.70, and in the daily roundup, break 130.70, we're going to 130.20, because I think we're consolidating like this. And we went to 130.20. Actually, the low was 130.16 today. So now here we are in this triangle consolidation. It's hard for me to get really bearish right now. We break below today's lows, then that's going to open up some downside. And that's why I'm not very active today. I'm actually, I picked up a little Euro Aussie this morning that I sold yesterday at 164, because I'm working a core position here. So, you know, my cost average is roughly, it's right around here. But I'm waiting for it to actually break higher. This is the trade that I'm really want to be kind of aggressive on. Oops. There we go. This is the trade I want to be more aggressive on, but I can't do it without the stock market really rolling over. And right now, this is signaling to me that we're not ready yet. Euro New Zealand as well. We couldn't break above 176.50, and 176.50 is a big resistance that needs to go. So for right now, I'm just kind of waiting. I think the euro can dip a little further. I'm not getting long down here. I want to be long. I just don't want to be long at current levels. I think we're kind of in the middle of no man's land, if you will. Whoops, that's not what I wanted to do. Sorry, wrong. Hit the wrong button there. There we go. I like I said, I think this is the wrong area to be on the long side. We could pivot off of this support. Like this support here could end up holding, and then, you know, but I'd like to see it tested and see how we respect it versus me just assuming that it's going to hold or that it might break. I'm not here to assume anything, because, you know, if you assume, you make an ass out of you and me. Got it. Anyway, so and that's kind of what I'm looking at with the Aussie. I want to see it test some of these levels down here. Kiwi is actually holding up a little bit better, but I still think that on the Kiwi, if we break down, it's going to be pretty severe. If we break through all this 63.80, I'm actually surprised the Kiwi is holding up as well as it is this morning. But the dollar Canadian, I missed my buy this morning. I was trying to buy it down here, and I'm a little frustrated that it didn't get down to my, you know, the levels for me to buy it. So it's a little firmer, but we're in this descending channel, and I'm very much aware that we'd have to break above 137 for it to turn bullish. So I am starting to get a little nervous getting on the long side up here. And there was one other thing I want to talk about. Oh, yeah. And then I'm going to get some comments from Steve and Stelios here. So you got to be a little careful with gold. I traded it a couple of times yesterday. I traded on the short side, and then I covered it. Didn't make a lot. You know, I kind of made a little bit, you know, as we were showing failure. But if we close below this 1763 level, I am expecting some downside, because I think I blogged about this. Oh, I can't remember. Anyway, high to low, last big move. I mean, this is a big this is a big move in a couple of days. I mean, we went from 1700 to 1450. That's a big move in just a couple of days. Hit the 127% extension, divergent relative strength all over the place. As I told you guys yesterday, I thought it was going to roll over. We have now a reversal candle developing, reversal pattern developing. This is like a shooting star. I want to be short, but you got to be careful because we could get a bounce here, and intraday, we could get a bounce back above 1765, and next thing you know, we don't have a false breakout. So I kind of want to let today confirm what I'm thinking, and then a close below this 1762, 63 level. Then I'm looking to short going into the end of the week and probably into the beginning of next week. So that means it's more of a trade for tomorrow. I mean, it's not like the gold can't come out unwound today. It totally can, but I want to be a little careful with it here versus just making an assumption it's going to make the move that I think it's going to make. You know what I mean? I don't want to just make that assumption just yet. You can see that we really have to break below 1750 roughly for it to really be bearish, where I say, you know what, it doesn't even matter now. I'm gonna just start trading it on the short side here. So it's at a very tricky area as far as gold goes. And silver was leading the way yesterday. It's not leading the way today, but we had this rejection off the triangle. I still think 17 can be tested. Obviously, if we break below 17, then things change a little bit here as far as the bullishness in silver. And you can see actually this is big rejection right there in silver. All right. Anyway, there's a few things that are developing. Today for me is a lot of waiting for the market versus, like I said, making assumption things are going to happen. It's been a pretty active week for me this week, but for right now, I'm just kind of standing aside and seeing if the euro can dip any further, seeing if the dollar could strengthen a little bit further. So anyway, I want to bring in my colleague Steve and Stelios and see what they're thinking this morning. Good morning, Steve. Good morning, Stelios.
Good morning, Blake.
Hello, everybody.
Hey guys, how you
Good
doing?
morning, Stel.
Very well, thank you.
So, before we talk about the markets, I was talking about our community and how beneficial it is to have all these traders around you. And so I need to take a step back and say that a lot of the traders that are in that chat room are people that have chatted with me for the last 10 plus years. And we brought a lot, like I said, when we started ForexAnalytix, it was more to have a safe place to land for the traders that I've been dealing with for so many years. And now it's really grown into a really amazing community where for me, I get up at, like I said, I get up at 3:30 in the morning. And when I get up, I have everybody's in there chatting about what's been happening in Europe, which is great because it gives me a sense of, oh, this is the way I should be approaching the market today. Do you guys have any other comments that you wanted to bring up about the ForexAnalytix community?
Well, me personally, I want to say that we all learn every day, and personally for me, because of the way I trade, I'm not a scalper. I'm a more like a medium-term trader. I still get timing quite wrong. I get the right idea, and my timing usually was not great. So whenever I have a trade idea, I go to the chat room, I speak to a few people, try to find what the best entry and exit levels are, and then I go from there. So for me, it's been personally very beneficial because it's improved my the accuracy of my entry and exit. So that for me, obviously, if I want to do a trade that goes against what Amanda is saying, I will never do it. But that's another thing. But yeah, for me, it's been very beneficial. I think it's beneficial for everybody.
Yeah, it's a great. I mean, you're more of a macro, longer term trader, which is different than a lot of people that are listening in here. So,
Yeah.
So yeah, anyway, yeah, that's great to hear. How about you, Steve?
I kind of missed the chat room. You know that I don't have so much time to spend in it, but it's definitely, a magnificent community, and a lot of people that don't know it might think that it's a group of a lot of amateur people, but actually it's a group that has a lot of experienced and great traders. So it's extremely beneficial.
Awesome.
Changing.
Well, I know the people get a lot of their ideas from you specifically here on this webinar. So I'm not going to take away your time as far as, what you want to cover today, but is there anything that's really got your attention before I give it over to you?
Yesterday's move lower in risk was quite interesting because we keep bumping our heads on the same resistance area, but as you said, I'm still skeptical. So yeah, there are a few levels we have to cross, and my eyes are clearly set on indices. I'm still short the indices, but I strongly believe, and I think it's still very likely that we're going to see a little bit more upside, because it's the path, of least resistance from a technical standpoint, but also it's the most painful path higher, because we know that a lot of people, due to fundamental logic, are looking lower. Unfortunately, even if you are like a dedicated FX trader, there is nothing you can do nowadays if you're not fully aware of what's happening with risk, because everything has more or less become one trade, right?
Yeah.
I mean,
it has.
There's no chance that you're going to see the dollar strengthen a lot unless you have risk off. So, yeah.
Yeah. Well, we'll see if we can get the indices moving out of this triangle that we see in the S&P. Hey, really quick before I let you take over here, and that's what we're looking at. Well, what I'm looking at here with the S&P. Well, and as Steve pointed out, it is basically correct. Rick wrote in, and a reason I want to bring up Rick is because I was actually checking in on him yesterday. He used to live in Texas, then he moved to Oklahoma, then he's in Pennsylvania because his family's out there, and I'm not sure where he's at right at this moment. I think he's still back east, but I was checking on him because the COVID cases in Texas were they're screaming higher like they are here where I live. So I was checking in on him and I didn't hear back from him, but he did write in this morning. He says, I've paid my tuition since 2003, Wise Trade to now. And by the way, I've met Rick in person in 2003 and probably 2008, maybe, roughly, multiple times anyway, in person. He says, cheapest education for the value I've had, 17 years at about $1,000 a year. Sad I can't be on chat much right now. And I think the reason why he said can't be in the chat right now is because I think he's out of town, away from his home. So anyway, Rick, great to hear from you. Glad you're doing good. And he goes, oh, he said, nope, this is Rick from Oklahoma. Just wrote in wrong Rick. Oh, this is Rick from Oklahoma. Other Rick. Anyway, and that Rick, by the way, I have never met, I don't think, in person. He actually goes by Dean in Oklahoma. He goes, yes, he said nope. But he's been with us for all the years too. And I was actually checking on the other Rick, who's in our chat room quite a bit. So anyway, well, good to hear.
You should at least send him an 8x10 glossy autographed picture.
If
you haven't met him,
of you,
the least you
absolutely. Could do. Of you, yeah. I would do that.
No, of you, buddy.
Of you.
All right, I'll send a karaoke video, buddy.
There we go. All right. So anyway, and he said, no, we may have met in Addison at one time, which we may have. So anyway, just it's a community we've been building for years and years and years, as you can tell.
Dale, one of the first things I got from Blake is this.
What's that?
A bobblehead from Blake. That's Blake's bobblehead.
Oh, I can't see it. Oh, you got the ball. Yeah. Oh, yes, the bobblehead.
Here, Steve, let me ask Blake a question. Blake, are you bullish or bearish gold? Go ahead, Steve. Put Blake up there again and shake his head.
There you go.
Bullish? that looks like strongly neutral.
And the other thing which ties very well with what you just asked is this die, that says like hedge, play, sell. It's a trading die. Yeah.
Oh, that's the trader.
I still use
yes.
Yeah, I still use that system.
I sent him the trader dice many years ago. Okay, you guys have fun with me. All right, see you
You're
guys
like
later.
Vernon and Bailey, man.
Bye, guys. Have a good
Bye,
one.
mate.
Good luck. See you
They
tomorrow.
can't see it,
Bye.
Blake. Good luck today.
Data. Initial jobless claims, another 1.5 million. A second consecutive week that it's worse than the expectations. We had an expected 1.3 million as last week, and in both cases we got roughly 1.5 millions. We got durable goods, which is better than expected. Keep in mind, previous month was like a huge down number. US GDP final quarter on quarter was a minus 5%, exactly as expected. Core durable goods, yeah, okay. GDP deflator 1.6 versus 1.4. Core PC prices 1.7 versus 1.6, and continued jobless claims 19.5 million. That's a little bit better than expected. The expectations were for roughly 20 million. So
Yep.
still.
And remember, we have GDP final reading at -5%. This is with what, 2 weeks, 1 or 2 weeks of lockdown? What was it? I can't remember. You know, the back end of March.
Yes, because that captured only a fraction of the lockdown period.
Yeah.
That is very correct.
So Q2, obviously the big one, and
yeah, Q2 is going to be
for those who have been following at the Atlanta Fed forecast, which usually is pretty good. Started with something like -20. Now it's showed at some point -50%. It's going to be bad, but whatever it is. But as always, the question is how quickly and to what extent do we bounce back from this? And the news that we're seeing is definitely not reassuring, because there are many. Excuse me. There are many reports of more cases of COVID-19 cases in the US and in Europe. Actually, we had the biggest increase in cases, weekly increase in cases for a long time. So this is unfortunately far from over. I wish it was, but it's not. So we have to see what implications this has to the economies, and God forbid they should lock down economies again. I mean, that's going to be catastrophic, because let's not forget, most people expect no more lockdowns. No matter what happens, people have seen that the economic effect is really bad. So I think the overall thought is that we're going to risk some more lives, but the economy cannot stop again. So,
yeah, although as we were explaining yesterday, Stelio, even if there is no lockdown in any economy, which I think they will try to avoid, as much as possible,
yeah.
What remains a fact is that, if things keep getting worse, people at a huge extent are going to self-isolate,
Yes.
or anyhow, the average person is going to reduce, their exposure to other humans, which
except the immortal youth.
Yeah, exactly. And that means for economies that are mostly based on consumption, that's immediately going to have a huge impact to economic activity once again. So even if there is no official lockdown, that doesn't prevent COVID from keeping economies under pressure.
Oh, I agree 100%. We've said this in the past, and I totally
and
agree.
That puts another nail in the coffin in all which were anyhow ridiculous theories that, you shut down the economy, the damage is almost immediate, but then if you flip back the switch, everything can go back to normal within 1 month, like nothing ever happened. I mean, we explained since the very, very beginning that that's not possible. I mean, you can shut down an economy in a flip of a switch, but even if you turn it back on, things won't go back to what they were, like, from 1 second to the next. That's not how it works.
Also, Steve, before COVID reared its ugly head here, there was already talk of the U.S. being in a manufacturing recession.
Yes.
And the hope was that
we had 2 years of data that were clearly depicting that there was a slowdown.
And the last hope was the consumer holding up the economy, and then you got this hit. So now it's just the Fed holding up the economy.
Yeah, which anyhow started happening months ago, because I remind you that the situation was so bad that the
Yeah,
Fed had to start last year intervening with huge amounts of money, like
because
$600
of the
billion.
Fed funds market was
Yeah,
locked up. Yeah.
exactly. In the repo market. I mean,
People
that was,
forget we had problems before this even got here.
I would actually say
Absolutely.
huge problems, and I might actually even say that COVID was, a nice excuse
There
to
you go.
to hide the real economic problems,
Right.
along with the huge economic problems that COVID brought to the economy as well, because there's no question about it. I mean,
Yeah.
COVID and its repercussions were a
It's a
huge
great
hit to the
scapegoat.
economy. But
Yeah.
exactly, but it was also, in that sense, a great scapegoat to hide real fundamental economic problems that are true in the US and with other Western economies as well. So yeah, that's a given. That's a fact, unfortunately. And
People forget that though. It's all, this is all COVID, but there were
no, it's not
issues
all COVID.
before COVID.
Yeah, no,
Absolutely. Absolutely.
unfortunately, I wish it was all COVID. I mean, that would be good in the sense that at some point, one way or another, this thing is going to go away. So if the only economic problems we had was, whatever implications we got from the pandemic of COVID, eventually, I mean, within a few months, a year or whatever, that would, get in order. But we're going to be left with a lot more issues. Anyhow, Stelio, what else did we have other than the data we just got? What did we have overnight?
Actually, what did we have? Very little. There was something that baffled me, because there was a headline about a German court about the ECB's QE program, and it was treated as, oh, this is very negative. Then I read the details, and this German court, there was basically a challenge over the ECB's QE program, and because it was a challenge that claimed that this was inadmissible, and the German court rejected that. So that, I would have thought, would be bullish the euro. And as soon as this happened, people were selling the euro, this is bad. And I'm like scratching my head. So if anybody can help me with that, I'll be very grateful. But from what I see, this was not, definitely not negative, but because this challenge was rejected. But anyway, it's not a big deal anyway. It's not something huge. It just baffled me a little bit. Other than that, I'm just going to say what I said yesterday. I might as well replay yesterday's webinar. It's all about equities, and yesterday's move was interesting. We seem to be, like you said, we seem to be bumping our head towards resistance and coming off, and the market is definitely feeling a little bit more vulnerable these last few days. And I still think we're going to see a leg lower before we go to all-time highs and beyond, because there's so many good things priced in, and so many negative scenarios that the market just doesn't want to think about.
Yeah, and a lot of people are forgetting that the market came into 2020 pre any COVID worries being priced for perfection. Yeah. And instead of perfection, we got the exact opposite, the antithesis of perfection. We got like it was like it started pouring down any kind of unexpected disaster somebody can expect, and still they managed, through injecting tons and tons of liquidity, to bring it back at all-time highs if we're talking about the Nasdaq, not far away from all-time highs if we're talking about the rest of the indices. So if the market began the year by being priced to perfection, for example, the S&P forward P was at 18 and it's currently roughly at like 24, 25, whatever it is, imagine what needs to be done to justify valuations where they currently stand.
Yes. We've said this before and we're banging on about it, and a lot of people say, look, equities are never going lower again, that's it, we're only going up. I agree on a long-term horizon, yes, but our job here is to try and get the best entry possible, and I'm not short equities, but I'm not long either, and I'm waiting for the leg lower to enter. The problem is that there are quite a few people who are also waiting for a leg lower to enter. So
that's what kind of scares me, to be honest. Yeah, I mean, there is a bearish interpretation here with the S&P, one leg lower, consolidation, one more leg lower. So let's see if that's what we'll get playing out here. In that case, we can see a move towards like 2870. For the time being, this 3000 area, 3015 area is still holding. So it's not that certain what's happening from here. You have to take the fundamental picture completely out of your mind, because if somebody's only thesis is that fundamentally things don't make sense here, it's a very weak thesis in the sense fundamentally things didn't make sense a lot lower than they currently are. So you can trade based just on fundamentals, because just based on fundamentals we should have never, for example, got a rebound all the way up to 3,233. So if that's your only thesis for being short, it's not enough in my opinion. Now from a technical perspective, let's see if this is just another consolidation or if we're actually breaking down. Last couple of days have been decent for the bears. For me, most important milestone here would be a daily close below 2970. I mean, a daily close below 2970, in my opinion. Then from a technical perspective also opens up in the medium term downside targets. There is already some damage done here on the 4-hour chart based on this triangle, but if you want to be on the safe side, that's the area you should be looking for. Now, anything else, Stelio, before we go to the rest
No,
of the...
I was just going to say, I think the way market's positioned and the way, the whole attitude towards equities is, I think with the only way to successfully get short equities and make money is if we see new highs or maybe even new all-time highs. Until that, it seems that people want to short, they do short, they get stopped out, over and over again. So, it might mean that we need to get up there before we get the new leg lower. But obviously, who knows? There might be a trigger before. But yeah,
on the other hand, yes, they are artificially supporting the market, doing their utmost. But as we've said many times, and people have to keep that in mind, with so many pending issues that can get much, much worse, you want to be on the long side. You have to be very, very careful, because there are factors that can really make this market tank by like 10% within 2 to 3 days easily, as we saw happening at the 20th of February, because the market usually works in this way. I mean, when it keeps ignoring important stuff for a long period of time, and then it gets forced to price them in a very little time. I mean, if you look at the market by February the 20th, everything seemed absolutely fine and in control. And then a few days later, you look back and it was like disaster. So, you have to keep that in mind.
Yeah, absolutely. Okay.
Okay, now having to do with the dollar. Clearly, this is an environment under which the dollar is going to be doing well, meaning 2 days of under pressure, risk assets being under pressure. Guess what? 2 days of the dollar strengthening and dollar denominated pairs weakening. Here's the Euro USD, which is pulling back. I have to say though, so far this pullback in the euro, doesn't look impulsive in any way to me. So, so far this technical picture tells me that, yeah, we might have, depreciated after like retesting this channel trendline resistance and more or less the previous high. But, the way we've been pulling back tells me that it is very likely that we're going to find support perhaps once again at 111.50 or a little bit lower, and we can continue higher from there. Somebody having a look at the cable can make more or less the same argument. I mean, we already had 2 legs lower in the cable, 3 legs lower actually, if you count the corrective one, or 2 bearish legs if you want to talk only about the down legs, which were perfectly equal. Usually, equality is quite a nice target. On the other hand, we got rejected once again from this channel, but as long as we trade above this 123.30 area, I mean, there's a good argument to be made that the cable can continue higher. Of course, for any of that to happen, basic assumption would be that there is no, huge downside for stocks, because if we see stocks closing below the level I mentioned before, like 29.70 on a daily basis, and then we start seeing them tumble lower, there is absolutely no chance that the dollar index is not going to be pushing to the upside, and that happening will immediately bring under pressure all dollar denominated pairs. So we were looking at that channel. Let's redraw this. So this is the technical picture here in the DXY. So it's all about what's happening here. Is this a corrective rebound which is going to resume lower, or is it something bigger? Zooming out, you see that the technical picture in the DXY is extremely mixed, because we've had this extremely choppy price action. We had like a big move higher, even bigger move lower, even bigger move higher, and we've since started depreciating in a rather orderly manner, but all that within that range. So from a technical picture, it's not very easy to to distinguish here what's happening. So the basic indication is going to be producing a higher high or a higher low. Also monitoring what kind of a rebound we're getting from here. Is it going to be a choppy overlapping type of rebound? If that's the case, you can be looking for lower lows. Now, admittedly, we're fully accepting that risk off immediately brings a bit to the dollar, but we also need to take notice that despite the strongest and fastest bear market that we've ever had in history, which started at the 20th of February, the dollar did run higher, but it never even made it above the 2017 high. So that's also something to keep in mind. I mean, you can even designate that as some type of a divergence. I mean, given the fact that in 2017 we were higher, somebody would have thought that under such a strain that risk assets were under, that the dollar would at least be able to rally, past that level at a multi-year and produce like a multi-year high, right? I mean, we would have to go back to 2002 to to find these levels again if we surpass the 2017 high. So that's another thing to keep in mind, which tells me more or less that, I mean, I'm very bearish the dollar in the medium to long term, but I'm extremely skeptical, because unless you're expecting that the markets can get decimated, which they would if there wasn't all that support, but we know that they're heavily supported, I'm very skeptical that the dollar can actually ever push to new highs before we see a much bigger move lower. So I'm monitoring this rebound. I mean, we have the 200 daily moving average currently passing from 98.40. 50 DMA is also converging there a little bit higher. We have the 61.8 at 98.70. So I would in general say that this area, 98.30 to 98.70, quite an interesting area of resistance. I would more or less keep a bearish bias against it, but we can rebound to test these levels prior to doing anything else. One of the biggest developments, we were expecting it, for quite a long time. Blake actually more or less shorted the top. I mean, that was an amazing trade. Was an eventual breakdown in crude. I kept saying here for during the past couple of weeks that listen, crude remains in this ascending channel. It's doing very well, but start noticing a lot of divergences are developing here, and it looks very fatigued. So if you want to be in the long side of the dollar, you should do that from a much better entry area than trying to chase this market higher. And specifically, we had mentioned about the need for crude perhaps to come back and retest the 29 dollar area before it can actually resume to the upside. As it seems, there is a very good chance that we're starting this move now. First signal was the breaking down of this ascending channel. Same day, we got a daily close, which in essence completed an evening star formation. You can see it here, these three candlesticks. So a nice evening star formation there. So second reversal signal. I think risk reward is probably still appealing, for a continuation lower. Although I have to admit that I believe that the next big move is again to the upside, right? That doesn't mean that there is not a lot of money to be made in the downside. I mean, we picked at $40. This is a continuous, by the way, so we don't have any confusions about the price. We picked at almost $40. A move down to $29 is a huge move percentage-wise. So I'm not saying that you can't make money being the short side, but I'm saying that perhaps there are more money to be made being on the long side again at a much better entry area. Now, everybody's asking about gold and silver every single day, and they keep giving the same answers. Don't fight gold and silver. What I find most worrying about, and I've said it a lot of times, is that gold in essence is climbing a wall of worry. The weight's been moving higher with everybody being extremely skeptical. Makes this a market that's not really loved by a lot. As for example, the rally from the 667 low post the 2008 financial crisis to where we got prior to this big bear market, big short-lived bear market that we just had, was hated by a lot, but it still kept grinding higher. So, I see a lot of similar characteristics in this move higher in gold, which was confirmed after we broke 1360. I mean, breaking through 1360. I mean, we said it since then that's a huge.
Isn't the DSI way up there around 90, Steve? So who are those people that are bullish if it's 90? It doesn't sound like people are skeptical of gold with that kind of reading.
That's not exactly the case, because a counter argument to that, before I tell you about the DSI, is look at the GDX, right? I mean, investors, at least stock investors, are totally not convinced. How do we know that? We know that because currently the GDX is at the levels it was in April 2013. Okay, let's have a look where gold was in April 2013. April 2013, gold was at 1550. Gold currently is more than $200 higher from there. The fundamental background has completely shifted. I mean, what was happening from a fundamental perspective in April 2013? The vast majority of the people were convinced, they had eaten the bait from the Fed, that everything is in check, that they have an exit strategy and an exit plan, that the emergency measures they had to take in 2008, 2009, and moving forward were just that, emergency measures that they would roll back once things started getting better. Okay, what is the fundamental? It's not only that we're $200 higher in the price of gold, but what's the current fundamental backdrop? We have a Federal Reserve that has now openly admitted in Congress, oppositely to what happened in 2008, that they have a growing balance sheet which will never go back down again. How do we know that? Because when Powell was directly asked about the size of the balance sheet and what's going to happen with it and if it's going to be unwound, the only thing he had to say was that, once the emergency is over, we're going to stop growing the balance sheet. And once the economy starts growing, the balance sheet size relative to the economy size, which is going to be growing, it's going to shrink as a percentage. So, look at the comparison between 2013, when the GDX was at same levels, and today, and you'll see we have a much higher gold price. Gold has been hitting all-time highs against every single currency other than the dollar. And the macro thesis is that monetary easing has gone to to the moon and beyond, and there is no expectations that's going to change anytime soon. So keeping that in mind, I think there is potentially a lot more upside for precious metals, for monetary precious metals like it's gold and silver. So platinum on a second level. So this is a rally that's probably not loved by a lot. I mean, a lot of people, if you ask them, they say that they're bullish gold, but I don't think a lot of people are actually participating in this rally in gold. And a lot less people are probably even participating in this rally in silver, especially considering that silver still remains in a downtrend that began in 2011. And why does it remain in a downtrend despite the huge move from $11 to $18? Because we still haven't broken the series. If you zoom out in the chart, we still haven't broken the series of lower highs. That was the high, a lower high, a lower high, a lower high, a lower high, blah, 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 blah. You get it. So we still haven't even invalidated the basic definition of a downtrend. We will once we see a move above $19. In any case, both gold and silver are showing quite a few divergences, which, yes, would indicate that at some point we're going to see a pullback. But both of them, on the other hand, are just consolidating the recent gains. So I think it's very dangerous trying to fight them. You can definitely at some point make money to the downside, but I think that if you're looking at the forest and not at the tree, if you're looking at the moon and not at the finger that's pointing at it, the side you should be looking to be involved in those ones is the bull side. Now, admittedly, this is not the best place to be buying them, but nevertheless, you should be looking for areas to buy them and not areas to sell them. That's my personal viewpoint. Let me go through some of the questions. Do we have an interview today, Dale? Okay. Bearish flag on the 4-hour chart in silver. So that was, more or less what I was talking about. Yes, this can prove to be a little bearish flag here, if that's what you mean. This one. This one. So yes, in the short term, we can see another leg lower in silver. No doubt there. Okay, so if that's what you're looking for a short-term trade, yes, I'm with you. It can happen. I mean, it looks as a valid interpretation from a technical perspective. But as I said again, I'm looking to be in the right side of this market, which might prove in short-term time frames to be the short side. But I think in the longer-term time frames, it's going to remain the upside.
Hi, Anthony. I see you.
Oh, so we do have an interview today, Dale,
Yeah.
right?
Yes. Anthony
Okay.
Chung is with us, and
okay, great.
he's with Amplify Trading. So I'm looking forward to talking to Anthony in a few minutes. You have a couple of minutes.
About Q. Yeah, let me see what.
That attendee who's talking about trick patterns of candlesticks, Steve, if he'd like to be interviewed on Face, have him get a hold of us and he could show us what he's seeing.
Yeah.
See that question?
Absolutely. If you think you figured out a way to decimate candlesticks and at a better way than all technicians have found in more than 100 years, be my guest. I mean, I have an open mind. If you can prove to me that you've figured a better way to interpret candlesticks, honestly, be my guest. M1 to Fed balance, actual fraction of QE that makes it to the real economy per US of QE. It's getting less and less, so more and more printing is needed. Yeah, that's absolutely right. It's the law of diminishing returns, Sam. I agree 100% with you. Yeah, they're going to need to do more and more of the same to have the same result, but unfortunately, the same doesn't apply to the negative effects of QE. The biggest of which being moral hazard, right? What you just saw unfold with Wirecard, by the way, if there's any of you that doesn't know what happened with Wirecard, if you Google it, you'll find a billion articles just, briefly telling you that Wirecard was trading in September of 2018 at 200 euros because, that's in Germany. It's a German listed company, right? And it was trading at 105 euros. Guess when? A week ago, and it's currently at 3.5. So if you think that Wirecard is the exception, unfortunately, you're mistaken. And one of the reasons you find so many Wirecards nowadays is the fact that QE and all the monetary insanity keep supporting zombie companies and keep incentivizing people to actually toy around with accounting to to get funded for businesses that actually can't make any money.
Another
Anyhow.
great play by SoftBank.
Oh yeah,
What do you think? I mean,
they're also the guys that
Right.
that were about to sell to all the victims a 47 billion worth of
What's the name of that
IPO.
kid?
WeWork.
Yeah, WeWork.
WeWork. They
yeah.
almost made it in getting WeWork for a 47 billion valuation off the door. Almost. I mean, they could have easily made it happen a few months, prior to what had happened. WeWork was one day valued at 47 billion. Current value, if you ask me, negative.
Yeah. So SoftBank probably needs to reshuffle a little bit. They ought to look at charts. Anyway, SoftBank is very flaccid. Anyway, we're going to go ahead and thank you, Steve, for the wrap up and the board. See what I said, guys? You could come in every day, and after hearing Steve for 20 minutes, kind of have clarity in the markets. Okay.
Of course, they're insolvent, mate. I mean, they now openly admitted that 2/3 of the revenues were fake. But as I said, don't be surprised when you find out how many companies are following in the footsteps that Wirecard was.
Yeah, WorldCom and Enron.
If you
the
ask
more
me,
things change, the more they stay the same.
If you ask me, Tesla is going to be a Wirecard, not in the so distant future.
Okay. You're just jealous of Elon because he has a spaceship. Anyway, okay. Anthony, looking forward to talking to you. I'm going to make you a panelist now, buddy. And there you are. I'm going to ask you to unmute.
Hey, Dale.
Welcome to Face, Anthony.
Hey, how's it going?
Really great to meet you. And have you used Zoom before, buddy?
I have.
Okay, so are you going to share your screen?
Let me just see if
you
I
don't
can.
have to.
It says you cannot start your video because the host has stopped it. Do I need to be permissioned or?
You could go ahead and share your screen. It's a green box.
You can let him share his camera if he wants as well, Dale. But
for the camera, I like looking at Steve when he was talking. It was good with the camera.
Okay, go ahead. You put the camera on.
There you go. I just promoted you. I just promoted you to co-host, so you should be able to use your camera as well. Try it out.
Okay, let me try it now.
There you go.
All right, buddy. Nice.
We can see you. Hi.
Hey, I had to actually come into the office in the city of London for the first time in 4 months because in the southeast of London, the internet completely has gone down.
It has COVID?
What's that, sorry?
It has COVID?
It has COVID, certainly. It's fried the wires, I think, of the broadband.
Right. Well, you know what? I tell you what, it makes everything more difficult. So you've been telecommuting for a while, and I can see the office is pretty empty. You guys work telecommuting from
everyone
nowadays?
Everyone's
Yeah.
completely from home at the minute for the time
Okay.
being.
All right.
In our office building, I mean, there's other companies. There's just 0 people around still.
Okay. Well, you know, I like to start off, Anthony, with asking people about the beginning of their career and how they got involved in the industry and what they were doing prior and what their first gig in the
Yeah,
financial
sure.
markets were. Can you get in your time machine and tell us
Absolutely.
what it was like at the beginning of your career?
Absolutely. Yep. Where would you like to start? Right at the beginning?
All right. Yeah. Yeah. How did you get involved?
Yeah. So my introduction was a little bit different from, I guess, the traditional route of, kind of always having a definitive plan to work in markets. My older brother, Matthew Chung, he was trading at the time with Refco. If you remember
Gosh,
Refco.
I remember Refco.
Yeah, so he was at Refco, and at the time he started there, so he's probably he's 4.5, 5 years older than me. So I was still studying at the time, but I used to come up to see him in London because it's different city where I was studying, and I'd come on the trading floor of Refco, and back then, the prop floor was pretty big, maybe 150, 200 guys on the floor. And
Back then is what year?
that would have been early 2000s, 2001, perhaps.
Okay.
Yeah. So,
All right.
Before it all came undone for Refco.
Right.
But
right. And also when there was still somewhat of a trading floor going on.
Yeah, at that point.
So I mean, the exchanges. You're talking about Refco having their own proprietary trading room with not on the trading floor, right?
Absolutely. Yep.
Okay.
Yeah, in the London office.
Okay.
So, that was my first kind of insight into it. And then what happened was Refco had their own internal analyst desk. So there was a kind of the setup of the guys used to sit in the middle of the trading floor with kind of a horseshoe of 30 odd computer screens monitoring all the major news terminal systems, things like that. So I got to kind of see that as well as all the other guys that were trading, and they kind of, being the little brother of a guy that was already there, I kind of got taken out and things like that. So I got to know all the guys, even though I was quite young at the time, 16, 17 initially. And then completed my studies, and I finished university in what would have been 2005. And then at the time, my brother had gone from trading to then he was running the European desk on the analyst side, doing the Squawk box internally for Refco.
Everyone used to have those. Remind people, Anthony, that the little box that everyone would have on their desks that would broadcast to all the different branch offices what the company, the firm, the analysts were thinking for the day.
Exactly. So all the guys were trading intraday props. So they were trading predominantly fixed income futures at the time, but that kind of grew into different asset classes. So the guy's job was to basically let the traders do their thing. And then the analyst's job was to prepare people for set scheduled events of, like a central bank decision or corporate earnings or a bond auction. But then also, more importantly, almost to have an ear to the ground, talking to people in market, what order flow are they hearing? What rumors are they hearing? But then also monitoring, unexpected developments and being in a position where they should know ahead of time, kind of strategized or scenarios of how markets should react. So that was the Squawk box to assist the trader in that way, to be their eyes and ears in a real time sense. So Refco basically went under, as you know. And then the analyst desk at the time had a really solid reputation, because obviously Refco had quite a lot of reach in terms of its satellite offices and so on around the world. And basically the desk got spun off into its own company, and that company was Ransquawk.
Okay.
So Ransquawk then was my brother, and at the time his business partner, and they ran the desk, and then I was pretty much the third employee.
Okay.
Straight out of
I
college.
like the number 3. It's a number of completion, right? 3 strikes, you're out. Or the third planet from the sun. If you play hockey, you want a hat trick. and like the redraw formation. So, okay, you
Yeah.
completed the team.
Yeah. So I mean, when I started, we were just operating kind of 6 a.m. to 6 p.m. and we would just cover the European and the first part of the US session. And then we gradually grew the team out. We started covering the US hours. We started branching out, looking at single stock equity news as much as then just the broader macro, FX and fixed income. Built the team up, and I think we had at the peak after a couple of years about 20 guys working 24 hours a day from Sunday night to Friday night. And then my job was after probably about year 4 or 5, I basically started taking over the European desk, and then I started an Asia Pacific desk. So I used to have to work in London doing the overnight, covering the Asian hours.
Wow.
Which was
Graveyard.
I did that for a year.
And
surprised.
your wife made you quit?
Well,
or you weren't married yet?
Well, I was with my now wife, but she was my girlfriend then. So
right.
yeah, she that was
Didn't
a bit
like the hours.
Yeah, it was a bit difficult to manage at the time. Yeah.
All right.
But yeah, I mean, a great learning lesson though. I mean,
did you like doing it, Anthony? Because, you know, it's almost like being a host, except you're not interviewing people. And you know what? It's almost like, in a way, being like a sportscaster. You know, you're describing the game. You're giving people some insight to what might be happening, what kind of pitch may come, or, you know, third and long, and how much time is left in the session. So, in a way, it's almost like doing radio every day, isn't it?
Yeah, it's certainly such a tough role to recruit. I always
Yeah.
found, because we used to have all these super smart kids coming out of college, and you know they would know so much about markets, you know, even more than me, but
Yeah.
half of them. But the problem they had is that they weren't able to convey that in a concise and timely fashion on their feet, and thinking on their feet, and thinking quite laterally of like, okay, this has happened here. What could be 3-4 domino effects down the road then that could highlight a potential trade opportunity for someone, rather than just literally calling out the news. There was a big difference between.
Well, that's because they don't even like to make phone calls. They would rather text, right? I mean, they, you know, as far as the talking and the interaction, the younger generation, trying to have a live phone call with them. They only want to text. That way, you know, they don't have to give you their full attention. They could be multitasking. But yeah, so it's kind of either have it or you don't kind of thing, isn't it?
Yeah, absolutely. And I think the you know, the constant timelines, you know, the one thing I always say if a trader's not familiar with a squawk is that when you're a trader, once you've kind of identified the trade that you want to take, it's kind of you're waiting for that opportunity to execute then. And if you're not in that trade, or it's not near that point of execution, you're kind of out of the market. Whereas when you're a squawker, you are literally accountable. Every second you're on the hook, because who knows what might come out. What if there is a global coordinated rate cut? It's not scheduled, but if you're 3 seconds late, like number 3 again, if you're 3 seconds late, that's it. Everyone will cancel. You'll lose your reputation. So
not only that, people don't like dead air. So, you know, what I mean by dead air, right, Anthony? You did it long enough where you're not saying anything and people are wondering, is this service working? Is there something wrong with my volume? So you're constantly bantering just to fill the space. So yeah, people think it's easy, but it really is a lot of mental energy to, you know, facilitate a project like that. So now I know, you know, what you were indoctrinated in, that, you know, news and what's happening in the market, and you're an intelligence gatherer. You have to be, because that was your, you know, how you broke in, by listening to people that were so-called experts. And you learned who was really good and who was a good contrarian indicator while you're on the air. So you still do a lot of intelligence gathering. I'm a big believer in that you only have 2 eyes, and if you surround yourself with good people, that you're going to see things that you wouldn't be able to see on your own.
Oh yeah, Absolutely. So, a lot of the stuff I do now with amplified trading is working with some of the more junior traders who typically are much more technical focused by normal path, I guess, to trading, where technical analysis is the main way of which they're looking at things. But then I come in and try to open their mind a little bit about, not that I try to convert them into being this news headline macro trader,
Yeah.
but the kind of ability to have better awareness of potential risks that may materialize given the current narratives that are in play at this point in time, like what we're seeing with COVID, for example. There's various things that I would track, and when it comes to COVID, I'm not a medical specialist, so
Yeah.
exactly as you say, part of what I would do as process is I'd go on something like Twitter, and I'd start investing time finding qualified people who I don't know at this point,
Yes.
and then trying to curate a specific bespoke list, for example, where I'm getting people with actual decades of experience at PhD level that are going to perhaps give me some degree of insight beyond what you're just reading as a headline news story. California cases at record high. It's like, okay, that's one part.
Yeah, thanks for reminding me. So that's where I'm at. So let me ask you this. A lot of people, I have an old expression, and a lot of news traders, they don't like to hear it, but I have a belief that people who buy headlines today sell newspapers tomorrow. So I'm very interested in how you use news to get an edge in the market, and also curious what your philosophy is for having positions before red events, say like the NFP or the Fed.
Yeah.
I try and be flat and react to the reaction. I'm wondering if you try and get an edge, kind of knowing what the news may be and position yourself ahead of it.
There certainly is as you'll know, I mean, the week prior to non-farms, you have that kind of suite of employment-related data which can give you a degree of insight. But you and I know that non-farm payrolls, and whether you're Goldman Sachs or you and I, they can't get it right.
Yeah.
Particularly in a pandemic situation. I mean, the numbers are so phenomenal, and there's so many methodology errors as we've seen present with the unemployment rate, for example. So I agree with you. It's not, I 100% wouldn't encourage anyone, really, would be my advice, to have a position on in an intraday environment, that is, trying to then second guess that they've kind of calculated that there's going to be an upside reaction because the number's going to be positive or negative. I would always say as well is don't try to hit market on that first initial spike. When the news comes out, there's a real lack of liquidity, the orders come out, and you can see the market starts jumping around just before then the algos hit it on the main headline. In the way I kind of explain it to new people is that, if you think about an automated trading system, the first in, first out kind of chain of events, when you look at a kind of a multi-component report like payrolls, you get the non-farm change headline. And that's where the market reacts. But as you and I have seen so many times, that payrolls is more than just a singular figure, whether it's average hourly earnings or unemployment rate. And so you're better to wait, in my mind. The pre-work comes in the identification of the levels. So I go into it not expecting one outcome or another, although I have an idea. I don't force that on the market. I would look at higher and lower levels and play out then in my mind. And this is what I do as a strategy with every news type of event, whether scheduled or unscheduled. I'll think about kind of most bullish to most bearish scenarios and maybe a selection in between. And then, well, what course of action would you take should one of those scenarios materialize? And then it's about just holding fire, I guess, unless one of the extremities happens, because that's when there's generally a more reactive, cleaner, larger type move that perhaps you can get hold of. So it's a lot of what I would say is and your second question is more about ahead of these events. There's so much pre-planning that goes on. Yes. I think that's a massive underserved thing. If you're a headline trader, an effective one in my mind, and the guys I've seen be successful, it's never reactive, really. unless it's a black swan event and you really get hold of something, it's very rarely is it reactive, is even away from a scheduled calendar. If you think about the current context, what are we looking at? Well, there's data coming out this afternoon, but quite frankly, no one cares. If it's GDP Q1, no one cares about that anymore. No one really, jobless claims come out a little higher, it doesn't really matter. Look at the last couple of days, the COVID situation is key. So then for me, it's about, well, where can I get that sensitive information quickly? What are the current statistics? What is the steepness of the trajectory of these cases and these hotspots? And also, where is Trump at this given point in time?
Yeah.
What's his itinerary? Where is he going to be? Because as we've seen, when he's in Arizona, for example, like he was, Arizona is one of the worst hit areas in the moment in terms of increases. Of course, he's going to increase the rhetoric about China, for example. When Navarro made that comment, these things, I think you can. Obviously, you can't predict the precise timing, but there are ways and means to be more intelligent, I guess, about when those risk kind of events could happen, I guess is what I'm saying.
So you've been doing this for a while. Have you ever seen a period where there have been more tape bombs that have been coming across from, political leadership here in the U.S.? Have you ever seen more tape bombs? Before COVID, it was a trade deal, right? Trade deals okay, trade deals off. They still pull that rabbit out of the hat every once in a while.
Yeah.
Besides COVID, I'm curious right now, Anthony, if you're starting to think about the elections coming up here in the U.S. and what kind of news flow you might be looking for to give you direction on risk. Is that what you're starting to beam in on?
Absolutely. And I've got quite a good series of graphics actually. So
You could share your screen. Beautiful.
Yeah. So first off, that trade war situation that you mentioned, I'm sure most people viewing have seen this before. And this is that idea that obviously we know Trump's kind of agenda here. We know his fixed timeline politically that he has. And when we have a situation where there is what we're seeing, say, here, which is the US is having its biggest rise in COVID cases in quite a long time. And it's specifically happening in areas like Arizona or Texas, for example. That for me then, as per what Trump does with Twitter, he needs to almost disassociate himself from the fact that the virus has anything to do with the fact that he was last to lockdown, he was the first to reopen, all these types of measures which inherently would have assisted the spreading of the virus because of this quest to get the economy kind of firing again. So here, what would be a political tactic to deploy would be, well, it's the Kong flu. It's the Chinese virus, as he keeps saying. So you can almost anticipate then that the worse this gets, the more the rhetoric will turn negative, anti-China. And then this is when we're in this talking tough section on the right-hand side. The market then starts to have a bit of downside, and that's when he starts pushing the buttons on Jerome Powell again and so on. But then, as you rightly said, we go through this ebb and flow, and if the market does sell off and it's more continuous, all of a sudden, I think we had Kudlow coming out just before I came on, and he was saying, we're going to have a V-shaped recovery. And then Navarro the other night, half an hour later, you took my comment out of context.
Yeah.
For me, this is all the administration managing the public perception to appear to be taking a firm stance with China. But as we saw, a week ago, Trump and Xi apparently have been cutting the deal anyway to get a second term about buying agricultural goods and these things. So,
has China acted on that though? I know that was an
interesting thing on the phase one of the deal. That was the beginning of the year when it was all kind of quite positive. That was when it was looking a bit shaky in December. Then they struck that deal, and China said they'd upfront buy $200 billion worth of agricultural goods. They were actually committing to that when you start tracking the actual figures of the actual raw commodities, even though some of the headlines that were being splashed were saying the opposite thing about it's looking unsure whether they're going to follow through. So again, you've got to understand with mainstream media who is reporting the news, what is the source, and you've got to have a breadth of sources to verify things. Not, obviously, some are right, some are left, and so on. So, yeah, I mean, moving on from the trade war, though, as you said, we kind of just had a quick look at these cases, and for me, the COVID thing is so key now for the election. And, as we go through these areas and, the list, as we can see here, Florida, Arizona, North, South Carolina, and so on, a lot of these are, if we start looking,
red states, except for California.
So what I'm interested in here is not so much the deep kind of blue or red states. What I'm more interested in is the COVID situation of the toss-up or leaning states, the swing states, essentially.
Okay.
Because a lot of that is where, as we always know, the balance of power generally lies. And here, Texas is on there, North Carolina, Arizona, Ohio, they're all there, and their college seat or college representation in terms of the count is pretty high, Florida included. So for me, it's about, well, how does it perform in these areas? And what can Trump do? I mean, you've seen Trump trying to cut deals for the energy sector, obviously very important for Texas. Mnuchin talking about another stimulus on top of what they've already done. So the tracking of the virus in step then with looking at the individual polls in these states, I think it's going to be something interesting that certainly I'll be looking at. And, you look here at the RCP polls, the average poll of polls across the US.
Okay.
Biden's plus 10 at the minute.
Yeah.
But I think one thing that people forget is that Biden's always been in the lead. So I wouldn't, as we've seen so many times, and Britain was the most case in point in 2016. No one thought, why on earth would you vote for Brexit? I mean, economically, it's almost like suicide. But that was the biggest mistake that analysts and people in markets made, because we didn't understand then the underlying sentiment in the middle of England. We're all caught in this London bubble, basically, which is a very different place. So here, I'm not kind of saying that here Biden, it's a walk in the park now at this point, but it does bring up then interesting things. I think it Kramer yesterday was talking about that's why the market's selling off. I'm not so sure about that. The Democrats would have to come in with some sizable stimulus anyway for their own political well-being. But here's a kind of final interesting, quite telling graphic. And this is looking at the presidential years.
Yes. And
it's looking about when we've swung from Democratic to Republican, or the other way around. And generally speaking, when we swing from Dems to Republicans, the market has a positive performance there on out. When we go from Republican to Democrat, the market nearly always sells off in the following 3 months.
Interesting.
You remember when Obama came in? I mean, the market got crucified, but not that it was his fault. At the time,
the financial crisis.
Yes. So markets and politics or economics is so important for politics. So whenever you go through a big shift where you see large mass unemployment, confidence is low, there's inequality and division in terms of wealth gap, that leads to social change, and that's generally what you see over the long term. So that's why the pandemic is really important. And what I see Trump doing here, or I'd anticipate him to do, is worry about the accumulation of debt later and just spend as much money as possible.
Yeah.
To put as many stimulus checks in your pocket.
Bernie Sanders on steroids.
Right, because he has to.
In a way, right.
Right, because, this is the difference between the USA and China, for example. What Trump is concerned about is the next 4 years,
right,
or 4.5 years.
Xi's worried about the next 100.
Right. So for Xi, I mean, when you understand that the trade war headlines, when they're coming out, and you think about it, it's always the US that's the aggressor. It's always the Western developed markets that are normally the aggressor on these issues, because with China, they're playing that long game. And the inevitability is there you know, the infrastructure is being happening, the alliances strategically is what's so incredibly interesting right now, because I kind of look at the world as in you've got Team China, which is kind of Captain China, and you've got Russia, you've got Pakistan, you've got Iran, and then you've got Team USA.
Yeah.
But Team USA is losing a lot of allies right now.
They're alone on the court.
Which is...
Who's with them? I mean, I thought Modi was with him until a week ago. I thought that when the president went to India during the beginning of the pandemic, that maybe they had an agreement to be a proxy against China and started that little clash in the Himalayas. But now Modi's talking to China. Look, in fact, I interviewed someone yesterday. It looks like the U.S. is really alone. And when you need global cooperation, I don't think there are going to be many willing. Do you think that if Biden is elected, that there'll be a repair of those relationships? Or is it like when somebody, say, has been coming to your store, but they go down the block to someone else and it's just as good for the same price, that they may never come back?
Yeah, I would say that you more the former, which would be that, and I think that's why actually I think China would prefer Trump.
Biden prefer Trump.
For Trump, because if Biden comes in and he does start to, you know, rebuild these relationships, let's say, and with, say, Europe or Britain, because what was it? There was a headline yesterday, and the US is firing shots at the UK and Europe again with more tariffs and so on. You know, that's not so. A united America with its Western allied forces, if you want to use that terminology, I think would be much more problematic overall for China rather than a singular force like that in Trump. So, yeah, I kind of see it like that at the moment. But I get what you're saying. At the end of the day, I think with a lot of this stuff, when they get into power, what politicians say and what they do is two different things. And when they get into power and it comes to just trying to get the economy going, I don't know.
Let me wrap it with this before we talk about your business model and what you do. What's the most important fundamentals and news flow that you pay attention to when determining potential currency trades, Anthony?
I guess the most centrist to it all for me, if I was simplifying it, would be central banks and what the forward guidance or the rhetoric is coming out to central banks at that time. I mean, the underlying backstop for me directionally over the medium term, let's say, is derived from the policies of which they're deploying at that given point in time. So understanding where the market is and the fluctuation, if you like, on how aligned or not they are with what, you know, when we saw the dot plots from the Fed,
right?
What a joke.
Yeah.
I mean, that's the kind of thing where, you know, that type of, I mean, I think the dot plots are running on fuel, on jet fuel in terms of, or on fumes, I should say at this point, because then they're just redundant in this type of uncertainty.
Yeah. We've had to throw away a lot of things that were working traditionally in something that hasn't happened for 100 years. And, you know, this pandemic has been easier for me to trade than the last one.
Yes, how was
that? Years ago, Anthony? 100 years ago? When Blake says I'm an old guy, so.
when it was SARS and MERS, how do you remember that? In market?
I don't. I really don't. I know I didn't feel any, you know, the kind of fear, and, you know, there were no lockdowns here. It was kind of like, oh, that's just happening in the rest of the world kind of thing for Americans. And we're finally learning what people in Asia had to go through with those other epidemics. Do you have a view on the dollar here? I mean, it's pretty, you know, you have people in some people saying that we're going to have, because of emerging market debt and there's a shortage of dollars, that we could have a one more blow off rally in the dollar. And you also have people that, for obvious reasons, the Fed action. They wanted to base the currency. It'd be easier to service debt that way. Where do you come down? You come down constructive, bearish, or strongly neutral?
Yeah, probably strongly neutral, because I would say my expertise and what I look at day to day is much more short-termist than
Okay.
looking at that kind of outlook. So
Okay.
for me, at the moment, I mean, the dollar movement has been absolutely indicative of just generally the intraday risk appetite. The correlation with the equity movement, for example, and like what we've seen quite tight with oil recently, all just by product of the moving goalposts of people's expectation about the shape of the recovery on the pickup now, and the fact that they're not going to be able to kind of they're going to have to put the brakes on the reopening, and that's not priced in, that rally that we've had in equities. And so at the moment, the way I'm looking at the dollar is just purely in that strictest sense.
Okay. It's
But
fair to be neutral. I mean, you look at the chart, it's gone nowhere when you look at a long-term chart. Why don't we now talk about what you and your company do at Amplify Trading?
yeah, sure.
And tell me what your position is. You're training people and working with people. You also, I believe, I did a little research on your site that you have accredited courses for at certain universities to teach kids how to trade.
Yeah, so hold on, let me just turn something off 1 second. So we have basically two kind of main divisions, I would say. The one I'm currently most involved in is the trading side. The other side is the technology side. So on the trading side, we have a small team of proprietary traders, all of which would have come through our training program that we would deliver now fully virtually, but we would normally deliver. We've got a small trading floor that I'm sat on now is just around the corner from the Bank of England.
Oh.
So we would take people from lots of different backgrounds essentially, and they would go through a series of learning over a period of basically months, and then at that point during that process they get to trade our capital, a relatively small size in the development phase, and then that scales up then to trading, all being well, of course, trading full futures with a global macro-led cross-asset class kind of strategy intraday.
Okay.
So that's the kind of trading side. That training that we do though is it's accredited by quite an old industry body in London, and it's equivalent. What we train or what we deliver on that side is the equivalent to doing, if you do the whole training program, the same status as if you completed a university degree in the UK.
Like a 4-year degree, like in the US they call it a BA or a BS.
Right. Yeah. So
undergrad degree.
Undergrad, exactly. So
okay.
So it's a pretty high level in terms of a qualification. So some people use it for. We've had some guys who are working maybe in a hedge fund sales at a bank, for example, but have never actually traded, for example. So they need some exposure to taking some real risk. They need to accumulate a couple of months of pulling the trigger, so to speak, and then that might qualify them. And then they leave us and they go get a job working in a different role, so they can use it as a career pivot, for example.
Nice. Nice.
So we get a real variety of different types of people. I mean, that would be
that's an important niche, because when I was younger, all I had to do was go down to the exchange, get a job as a runner or a clerk, and just be immersed with traders. And if you're industrious, you get to talk to people and learn from people on a trading floor. Now they're all bowling alleys. So people need something like this to be prepared.
Yeah, absolutely.
What do you think? What do you, people try and sell this, Anthony? I wonder what your answer is. They go, well, I know the secret to trading. Now, I say the secret is there is none. It's just hard work and learning to live through stuff, including adversity. And if that scares you, do something else. What is a secret to you?
Well, to me, there's just no shortcuts. Anyone who tells you that there is, I think, is not telling you the truth. In short,
Okay.
I think you need to be the people that I've been around, that I've seen who've been successful. There are a few that are naturally, that kind of gifted person who it almost comes effortlessly, and it just happens. But they are the one in a million.
Yeah.
Most of the other guys are the ones who, they're so immersed in markets. They kind of live and breathe it, and they think about it all the time, and they work hard at it, and they're honest enough to know that they've never mastered it, and that the market changes and it evolves, and you need to evolve, and it's those people that typically win out in the end.
I used to carry my commodity perspective chart book around with me everywhere. I'd turn it upside down. I'd have coffee stains on it, ketchup and mustard, depending upon what my diet was like at the time, but drawing lines everywhere. And so, yeah, you can't learn experience, right? It only happens with the passing of time.
Yeah. And then, say, when I help people to learn about markets who are relatively new, obviously I can help accelerate it using my own experience, like what you could. But at the end of the day, you've got to live and feel and breathe it, because only then will you really see how you're going to react under those circumstances. And, will you be disciplined when faced with certain situations, and will you make that right decision that you know what to do?
Okay.
Will you do it? But so yeah, that's the side I take care of. And then the other part of our business, which really has gone through a massive growth phase actually, and now that's actually the bulk of what we do, is our technology side. So about 4-5 years ago, we came across two super talented young individuals at one of the top London universities, where we were involved with some of the teaching. And they had this idea that they were at the time were applying, because they were still studying, they were applying for all of the major banks kind of grad programs. Yeah. But neither of them have ever actually done anything that was related to actually practically doing what they were applying for. I think both of them were looking at sales trading roles. And so what they went about doing was writing their own software to assimilate a sales trading market making type simulation that was intelligent, where you could create your own simulated order flow with all the participants reacting and the market adapting accordingly. It's kind of the summary of it. So we basically backed them. Then they developed it. We bought the technology fully from them a few years ago, and then we've kind of reinvested a lot of funds back into that. And now we've broadened that out. So we have simulations where you can do M&A, IPO, risk managing and compliance. You can do all these different types of things. So it's more than just trading now. And so what happens is the universities, and we're going out to the States actually this year with Morgan Stanley, which is one of our partners on the technology side. And universities basically are amazing at teaching you theory. There's no better place. But what they're not so good at is the connection to the industry, in terms of the practicalities of getting you ready for what it is you're going to do in the workplace. And as you and I know, what you learn and what you actually apply day to day is quite different.
You mean like trading a demo and having real money on the line?
Yeah, it's kind of a similar type of thing. It's just different. So
people used a paper trade, Anthony. You know what would happen if you got stopped out on a paper trade? You'd get a paper cut. That's it. So this was really enlightening, and I think that probably some people are going to be interested in following up with you. What's the best way? You want to show us or give us?
Yeah. Let me just show you one thing that some of the guys might find useful, which is this. I don't know if you've already seen it, Dale, but we have a YouTube channel.
Okay.
So I do a daily macro briefing every morning, London time, where, it's about 20 minutes long. And I just go over like the main key themes of that day. And I'll review what happened in the overnight session, what the news flow is in the calendar for the day ahead, and then I'll go through and give my view on the fundamentals, what I think is going to happen today.
Okay.
So that's like you would on the Squawk Box in your morning call, sort of thing, but visual.
Squawk has gone video.
Exactly. So
Okay.
that's. Feel free to. There's some other stuff there, and I've got one of my colleagues who talks about more things like Hertz bankruptcy and Robinhood explained and these sorts of things, which is.
I thought Robinhood stole from the rich and gave to the poor. The markets don't do that. Don't they steal from the little guy and give to the rich?
Well,
it's an oxymoron for the firm. Okay, anyway.
But yeah, the YouTube channel or otherwise, the easiest thing is just to go on the Amplify Trading website, and then let me just quickly show you. If you're interested in the trading side of things, then essentially you just need to go on the red section here. If you're a student, then there's the blue section here. But yeah, we're doing our summer intakes at the moment. So we've actually got 85 interns with us at the moment.
Wow. What are the dormitories like? In college, mine were fun.
Well, I think they're missing out big time this year.
They are.
They're sat in their mum and dad's front room, most of them.
Okay.
So they're losing out.
Anthony, like it or not, you're now my trading warrior brother. It was really great talking to you, and you really provide a niche that's well needed for people coming up in the business nowadays. Continue your great work, and now I know how to find you on YouTube, and I want to thank you for coming to edify our community about what Amplify Trading does.
No, and you're welcome, and yeah, anytime, happy to help.
Anthony Chung, you and your family, I hope you remain untouched, and all the people you work with, and good hunting during the summer trading season, buddy.
Yeah, you too, Dale. All right.
All right. Thank you,
care.
Anthony.
Bye.
Okay, everyone, Anthony Chung, and that's going to be a wrap for us. Remember, don't just count your pips, count your blessings, and we'll see everyone tomorrow. You're very welcome, everyone.